the answer for investment property test March 2019. Okay, question 2. Explain briefly how an entity should account for a 20 floors building if 17 floors are held to earn rental and the remaining floors are used as admin office. Each floor can be sold separately. So the answer would be, if the floors can be sold separately, then the 17 floors held to earn rental is recognized as investment property and the portion used as admin office is recognized as PPA. Okay, part B. On 1st April 2017, Dahlia acquired an IP at a cost of 10 million. So this is 1st April, cost 10 million. The company also incurred legal fee of 1% from the cost of the property. So 1% times 10 million is 100,000. So legal fee is capital expenditure because it is a cost directly attributable to the asset to make it into workable condition. So the total initial cost would be 10 million plus 100,000, that is 10.1 million. The useful life of the property was 50 years. Okay, the fair value of that property was 10.5 million on 31st March 18. Fair value is 10.5 million and 10.3 on the 31st March. Okay, so discuss the accounting treatment of the IP in accordance with FAR460 IP for the year ended 31st March 18 and 31st March 19 if the property was measured under the fair value model. So if it is under the fair value model, okay, there is no depreciation. Right? Fair value model, no depreciation. So we do the calculation first. Now when there is no depreciation, so you just carry the initial cost, okay, as a carrying value, and since fair value is more than the carrying value, there was a gain on fair value of 400,000, and this is to be treated as revenue in SOPL. On 31st March 19, the fair value is 10.3 and carrying value is just carry the 10.5 here to here because it is not depreciated. Alright, so fair value is lesser than the carrying value. There was a loss on fair value of 200,000 and to be treated as expenses in SOPL. So we are going to answer the question, the accounting treatment. So the question asks for year ended 31st March 18 and 31st March 19. Okay, alright, so for 31st March 18, firstly you would say on 1st April 17, okay, the building, what was that? The investment property is recognized at initial cost of RM 10.1 million. Okay, so we're done on this part, right? So since you have shown the working here, so you don't have to show the working here again. Okay, next point on, okay, since the IP is using fair value model, since the company value the IP using fair value model, okay, there was no depreciation. Okay, that means here the useful life here is ignored. Okay, you don't use that, so no depreciation. So on 31st March 18, the difference between the fair value of RM 10.5 million is compared with carrying value of RM 10.1 million. Okay, the difference was gain on fair value of RM 400,000 treated as revenue in SOPL. Okay, alright, next for 31st March 19. Okay, 31st March 19. The fair value of RM 10.3 million is compared with the carrying value of RM 10.5 million. Okay, the difference was loss on fair value of RM 200,000, okay, treated as expenses in SOPL. Okay, so that's done for part 1. Okay, part 2, prepare the journal entry of the IP for the year ended 31st March 18 and 19 if the property was measured under the cost model. Okay, so where is it? Sorry. Okay, so the second part, the IP is cost model, so we will ignore the fair value. So ignore fair value, the same question, but we ignore the fair value. Okay, sekejap So now we will calculate the depreciation. Nanti we kena buat. So the depreciation in 2018. So the initial cost, that is 10.100 divided by 50 years. So you get 202, 200 to 1000. Okay. Alright, so in 2019, same depreciation, that is 200 to 1000. So the journal entry entries will be 31st March 18 debit SOPL depreciation 202,000 and credit accumulated depreciation 202,000, and you will repeat that again for 2019. Okay, so that's it for the journal entry. Okay, thank you. The part C, I will continue in the next.